to the Money RX for CRNAs podcast, where you go behind the scenes with host Brett Fellows, CFP, as he explores the unique opportunities and challenges facing certified registered nurse anesthetists along the path to financial independence. In each episode, Brett shares expert insights and actionable advice, equipping you with the tools you need to take control of your financial destiny and retire on your terms. And now, here's your host, Brett Fellows.
Welcome to the Money RX for CRNAs podcast. Thanks for joining us. As always, I'm your host, Brett Fellows, a certified financial planner with over 20 years of experience in guiding CRNAs through the complexities of financial planning, tax strategies, and investment management. Now, for those of you who have tuned in before, welcome back. And for anyone who is listening for the first time, this podcast is dedicated to helping certified registered nurse anesthetists achieve financial independence and retire on their own terms. If you want to receive weekly updates with recaps of the show or resources that we mention on the show, as well as some exclusive content, sign up for our Friday Blitz email newsletter. And you can do that at our website, oakcapitaladvisor.com, or by clicking the newsletter link in the show notes. And that way, once a week, you'll get an email with a recap of everything and some links to the stuff that we talk about. And we're also really excited to announce that our new book is coming out. We should actually receive the books by the end of this week, called, coincidentally enough, Money RX for CRNAs, Secrets and Strategies to Maximize Wealth and Retirement. If you would like a copy of the book, we would be honored to send you a free copy. All you have to do is we'll put a link in the show notes, and from that link, simply fill in your information, and we'll be sure to get you a copy once it's been published. Okay, with that out of the way, one of our dear clients recently forwarded to me a list of 6 questions to ask a financial advisor that they had found on Facebook. And the client asked if I would mind answering them myself on the behalf of Oak Capital Advisors on a podcast episode. Now, typically, this kind of content is a little more self-promoting than I would ever put out on a podcast. This is more of a webinar type of content where the answers are a little more detailed than the educational type of content that I usually put out. Because to answer these, I'm going to talk about some of the ways I think about how things should be done. And like anything in life, there are many ways to get to the same destination. But I definitely like to take a stab at this, and my hope is that you'll walk away from this episode with some knowledge that you can use for yourself or even talk with your own financial advisor about. So here we go, and I'm just going to jump right into the question. Number 1, what is your firm's investment philosophy? This is a good question, and I would say that broadly speaking, in my experience, most advisor firms don't have a very consistent investment philosophy. It's more of an order-taking philosophy, which is fine if that's their business model. But if you're going to a financial advisor, one of the things you'll really want to know is, what do they actually believe about the market? What do they actually believe about how to invest money? And this is really important because what they believe is going to drive their decision-making in good and bad markets. And it's really scary when you have money managed by a financial advisor who changes their opinion on how to manage your money mid-cycle. Now, 2022 was a perfect example of this. With after 4 positive years of the market, it then lost 20%. So if the world's imploding, do they change their mind? If things are going really well, do they change their mind? You do not want a financial advisor who's really malleable. They do whatever you tell them to do, or they move when they hear something on CNBC. Which leads me to one of my pillar investment philosophies. We recommend clients use low-cost, index types of mutual funds or ETFs that track a broad range of securities as opposed to picking investments that are going to try and outperform. This is because over the long run, you want to expose your money to a broader market, say 13,000 plus companies and all of their growth, as opposed to selectively picking one or two or three. That's probably the biggest difference between us and many other advisory firms. When you pick stocks or mutual funds that are trying to outperform, the reason we don't like to do that is because it's not possible. Now, yes, it can happen, but on average, it doesn't outperform a broad market index. Now, this is a big topic. So if you walk away from this episode and you have questions or want to dive into this more, just give me a call, and you can schedule that directly from our website by clicking on the free pre-op assessment link at oakcapitaladvisor.com. Okay, number 2, what type of clients do we work with? Now, this is easy for us. We work with CRNAs. I think our average client is between age 40 to 50, and typically CRNAs who are in a phase of their career where they're starting to feel pretty busy and there's some leftover cash flow. And they're trying to make some really big decisions, but are just getting busier and busier with life. And we deliberately have narrowed down our focus of who we are servicing and what we are doing. And so I think that's a great question to ask when you're interviewing a financial advisor. Why does that matter from an investment perspective? Especially when you're a CRNA 1099 practitioner, you're going to have a lot of one-time expenses and cash flow events that are triggered by your career, meaning you bring on different tax opportunities. You have different retirement plan options. Your insurance decisions are more impactful. All of these transactions, plus perhaps the selling of your practice or the selling of a building, all of these cash flow events are things that are sometimes difficult for our financial advisor to understand unless they know CRNAs and have seen it. A lot of time, their investment plan for you may not be structured in a way that maximizes your risk-taking ability or maximizes your return because they're not anticipating these cash flow events. They're going to be too aggressive or too conservative in the way that they invest your money. They don't understand how your future cash flow needs are going to affect your current investment portfolio. Plus, their knowledge of your taxes, your tax situation, how to interpret the nuances of cash flow around your overhead and your debt. There's just a lot of factors that go into knowing your clients. And so it's important to have a financial advisor who specializes in your occupation. And the next question number 3, really piggybacks off of this, and that is, what is your process for helping me allocate different strategies for different accounts that all have different goals? So if you look across all of our clients, you'd see that the average CRNA has a half a dozen different types of accounts. There are some with pre-tax money, such as IRAs or 401ks. And then usually a couple of brokerage accounts or after-tax money. One account might be short-term. This is my building a down payment in 3 years kind of fund, or an emergency fund. There might be a brokerage account that has 40-year money. So when does the money need to be used, and how much time do we have it for? So how do we help allocate across these differences? Well, first off, we don't make any recommendations until we have a full balance sheet. We know what all of your assets are valued at, even the illiquid stuff like the practice if you're a 1099, and real estate. What all of your debts are, and amortization schedules, what you paid in taxes. We don't do anything until we know all of these things. And so I think one of the foundational answers to that is that we're just collecting more data and benchmarking more things and know more about our clients than probably anyone else in their life including CPAs and other previous advisors you may have. I mean, your CPA, they don't see the personal side very often. Now, they see a lot of the compliance side, obviously, and they're excellent at that, but they don't see the entire picture. So we're probably in a position to be able to make more informed decisions than anybody else just because we can see the entire picture. And often that's why clients feel so comfortable asking us some of the most difficult questions they'll have to make in their life: what to do with their money and what big strategic decisions to make. Now, another dimension to that question that I think is kind of implied is, how do we manage money specific to a goal of different types of accounts? And we think one way to understand about the way that we manage our business, we have dozens of portfolio types. So we might have a really, really safe account that our goal is to get 3% and not have a lot of volatility. Or we might have a portfolio that our goal is to get the maximum return possible with as much risk as possible and as much volatility as the market will offer. We might have a bunch of in between. We might have something just for 401k accounts and something different for after tax accounts. But each of our clients has a personal portfolio that's custom and specific to them. We assign them to one of these models to begin with, and then each client has a little customization differences that we make to each portfolio. So even though you might be in one of our safe portfolios, before any trades are made, especially if they create a tax consequence, or before someone makes a withdrawal, we're looking at your account and we're asking ourselves, is there tax here? Is this a good time to be pulling money out of this account, or should we use a different account? Each account is managed to a very specific level of risk, and by doing this, we are able to be very accurate for how we try to manage money and control the risk that each portfolio has. Next question, number 4. What are your fees? Now, I love this one. We charge a standard percentage of the money that we manage for our clients, which is pretty typical in a fee-only fiduciary investment advisory role. Our percentage starts at a certain point and then goes lower as the accounts get bigger, which again is also pretty much an industry standard. But what's a little different about our firm, however, is instead of requiring a CRNA to have a minimum amount of money in order to work with us, which could exclude a lot of CRNAs in the early part of their careers, we also have a monthly subscription fee to support us working with clients with really small investment account balances in the beginning. Now, our monthly fees vary by the complexity of our clients, and then eventually, when we manage enough money for a client, their monthly fees go away. They drop. So those are the only 2 ways we get paid. And building off of that question number 5, who else gets paid by me as a client when I invest with you? Now, that's a great question you want to ask, because sometimes when a financial advisor manages your money, there may also be a third party that's getting paid by you to manage the money. This would be called a third-party money manager. Now, in our firm's case, there is no other manager that's getting paid. It is just our fee. However, for CRNAs, if you have a 401k or a 403b plan or a profit-sharing plan, which are the most common retirement plans sponsored by very large employers, you will also pay what's known as or called a third-party administrator, or TPA. Now, these are the people who file the tax returns, making sure that the 401k plan is compliant and transparent for all of the employee participants per the Department of Labor. So there are additional fees in different types of accounts, so that's why it's such a great question to ask. Next question, number 5. Who are your investment philosophy mentors? I don't think I've ever had to answer this question before, so I had to write it down. I would say philosophically, there are some schools of thought I lean strongly towards and am influenced by. People like David Booth, who founded an investment firm that focuses on academic research for behavior science. People like John Bogle, that started Vanguard. Eugene Fama and Kenneth French from the University of Chicago and Dartmouth University. Basically, the type of people who are more academic and research focused and a little less stock picker. I lean more towards proven methodologies that work, manage behavior, and help people actually have sustainable financial growth. It is one of our core principles when we onboard new clients, and that is that we do what works. We never will implement strategies that aren't proven through published academic research. All right, last question, number 6. What is your process of continually educating me? I guess I would say I understand it. CRNAs hire us because they're hitting a point in their lives where they're getting busy and they no longer want to deal with this stuff. They want to make sure that things are done correctly, methodically, and that nothing's going to be missed or become a surprise. But at the same time, I love when clients want to learn at least something. They want to know the why behind some things. And I think that we're really accommodating of that. Most of our business has been built on free content and teaching and education, like this podcast. And a byproduct of, say, this podcast has been growth, and that was really cool. But the reason we started was just a way to teach people in the CRNA industry a bigger audience to teach than just our existing clients. All of which to say, I think my answer would be, we're constantly trying to put out as much content as possible. And our 2025 calendar is even more aggressive with writing and webinar and speaking events, and of course, this podcast. And so that's the list. That's a great set of questions. And thank you for sending them in. And thanks for tuning in and indulging me a little bit on this self-promoting content. Thank you again for joining me today on Money RX for CRNAs. I hope this episode helps you feel more confident about questions you may have about financial advisors. If you're ready to take control of your finances and free up time for what matters most, let's definitely connect. As I mentioned earlier in the show, you can schedule a complimentary pre-op assessment call with me directly from our website, oakcapitaladvisor.com. Until next time, I'm Brett Fellows, reminding you that every financial decision you make is a step toward freedom. Have a great day.
This podcast is for informational and entertainment purposes only. It should not be relied upon as a basis for investment decisions. This podcast does not engage in rendering legal, financial, or other professional services.